Hello, traders. I was wanting to do a trading basic video for some people that I've just recently met that have never been exposed to trading before. And let's see, make this big for a minute. So, first of all, what is futures as opposed to um, trading individual stocks? Futures is like what these stocks price is going to be in the future. If you want to trade crude oil or gold or live cattle, things like that, you need to be in the futures market rather than in individual stocks. You can get companies that deal with oil as individual stocks, but if you want to trade those products, then you need to be in the futures market or options market, either way. So, um, with futures, the advantages short-term, long-term gains, they're mixed. So there's tax advantages to trading futures. Also, the news releases are scheduled, and typically you don't want to be in the market when a news release comes out because it does some crazy things. And so there'll be a calendar listing all the news events coming up. A disadvantage for that for stocks, I can just give you an example. I was invested in Tesla um, early on, and a Tesla crashed and burned. That's an unpredictable thing. You don't know what's going to happen, but it happened. And the price of the stock dropped 75%, taking all of my money with it. And so that kind of stuff happens with stocks all the time. I can't remember which company it was, but that their stock plummeted about 75% because their CEO, I think he was at a bar and he was drunk and he bit some guy's nose off. And boom, their stock falls out of bed. And, if you were heavily invested in that particular company, then you lost a whole bunch of money. Well, you don't have that with futures. The products I trade, Nasdaq 100 and the S&P 500 are the main products I trade, and those there are stocks associated with it, but typically bad news on one stock is not going to move the entire market because there's 100 in Nasdaq and there's 500 in the S&P 500. They're the biggest companies, biggest tech companies in Nasdaq, biggest companies in the U.S. total are in the S&P 500. So you'll have all different sectors in the S&P 500. Um, I can show you a heat map of those things. Let's see. I think that it'll show it here. Yeah. So this is the S&P 500 right here. And these are all the companies associated with it. And some of them, the bigger ones, are the ones with the biggest market cap. And they call these the Magnificent Seven. Uh, Nvidia, of course, is the top dog right now. Amazon's on there. Walmart, Costco, Tesla, Oracle. You can go through there and learn every dadgum company if you want to. But the biggies are they do have the ability to move the market. Berkshire Hathaway, that's Warren Buffett's company. MasterCard, Visa, big names, big companies. Netflix. But this will be a heat map, and you can also do one with Nasdaq, and it'll show the companies involved in there. These are tech companies. So that's what you're dealing with if you're trading Nasdaq and S&P 500, and that's what I primarily do. So the basics, you need to learn how to read a Japanese candle chart, and this is just a way to it's just a way to show price. You're probably familiar with a line graph. and where you just see a line going up and down and up and down. The line would typically be tracking the center of these candles, where this just shows a little bit more detailed price delivery. And these opens and closes are important for reading price action, and that's what I am as a primarily I am just a price action trader. So these are called open high OHLC candles, which is open, high, low, and close. I think that's the way they list it. And I'll show you on a chart here in a minute what I mean. So if it opens and then moves up and closes higher, then it'll be colored green. The wicks represent the very highest price during this time frame. It can be any time frame. And then the low wick would represent the lowest price. But the candle body itself just represents the open and the close. The entire candle is how much price moved in that particular time frame. Wicks included, so you have to include your wicks. Now, if it opens and moves down during that time frame, it'll be colored red, and that's why you get the colors. It's pretty simple there. So let's go to a chart. I didn't log in yet. Let's see here. We'll just go to a Nasdaq chart here. And this is MNQ, but it doesn't really matter. So these are the candles. This is a 15-minute time frame. And this is what I was talking about on the open, high, low, close. This one opened here, closed there. This is the entire range. That 15-minute is the high and the low. And up here you could OHLC. So when you hover over a candle, it'll tell you the prices associated with that candle right up here, depending on which one you're on. So this one opened here, the high and the low of that time frame. That's the high and the low of this one. It opened here and closed here. So price went down during that 15-minute time block. And you can do it in 15 minutes. You can do it in an hour, 4 hours. You got lots of time frames to choose from here. I typically will look at the 4 hour when there's regular trading hours. When I'm marking out my levels, that's what I look for, is the 4 hour highs and lows. And I look for gaps and whatnot in there. So let's look at the line versus candles. Let me change the time frame first. Okay, so we'll change it to a 1 minute. This probably isn't the best representation, but we'll put a box around this little section right here so we can see it when we put it into a line. There's the high, that's all of it. Now if we put it into a line, that's what you're seeing. Okay, so it doesn't, you can use it, but it doesn't give you quite as much information as the open, high, low, close candles. So let's go back to the candle chart. So each one of these candles in the 1 minute time frame is telling you a tale. I use price action trading. So for example, this little section right here, price went up here. That's the highest it traded of the whole day. And it tried to push up there again, but it didn't make it. To me, that shows weakness in price. So I'm looking for a reversal pattern. I'm looking for a fair value gap to the downside to get involved on a move down. In this situation, the breaker actually isn't till right over here. And so I would be looking for a trade in this area once we got below it and put a fair value gap below it. And on that one, I actually did enter that trade and I got smoked because we pushed up one more time. But when we finally got below it again, then you could get involved here and get a few points to settlement. But this particular trading day was awful, so didn't do well on it. It was just hard price action to read. Didn't want to pick a direction. It was more of a range day. If you look at that 15-minute chart, it was going up kind of, but mostly just a range day. If you fade the extremes, I mean, you couldn't even get above the high there. Just the top of the range, bottom of the range. That's your best bet on a day like that. Okay, so that's futures in a nutshell. That's how you trade it. If you're brand new, you're just starting out, what can you do to get involved on something like this? What I recommend, always, this is an important part of it, always put in your position risk. If you want to do it with Topstep, it's going to cost you $50 a month for an evaluation. Um, you don't even have to do that. You don't have to spend money on that. But this is an important part of trading. Whenever you get involved with a position, you want to make sure you have a stop loss, which is where your risk is here, and a take profit of some dollar amount. I don't know why mine set at 264. I think I had a particular trade I was trying to get to fill, but you want at least a, 2-to-1 ratio or whatever in there. I've been meaning to change that as well. So once you get money in your account, you certainly don't want to risk it. But yeah, 200, 250 take profit, and is what I have on there. But you can move it around once you get a fill. You can move it around wherever you want. Yeah, so that's the basics of the candles. I have plenty of videos showing you what I look for as far as reversal patterns. I have a whole daily reversal patterns section on my channel on the playlist, and you can go there and you can look through those. Ultimately, what you would want to do is learn to recognize those reversal patterns in real time, and then you'll be ready to open a Topstep account, or I don't recommend doing a personal brokerage account. There's just no need to in this day and age. You can get involved with these prop firm challenges for very little money. Like Topstep's $50 for a 50K combine, and that's their best value in my opinion. The other ones give you more size, but they don't give you any more drawdown. Really, for the $50 you get 2,000 drawdown. For $150 you get 4,500 drawdown, and I think that should be tripled. If you're going to have to make triple the profit, then you need to have triple the drawdown. But so I think the 50K is your best bet on that. But you don't even have to do that right now. You can use TradingView. They have a free paper trading version, which is the same charts we use over here at Topstep. This TradingView is where I got this heat map. But let's see if I can find the super charts. There we go. So you can get on here, and they have this little trading panel down here at the bottom, and you can connect with your paper trading. Now this one on paper trading, unless you pay for data, is going to be 10 minutes delayed. So it won't be 100%. And also, I haven't figured out how to put in your OCO brackets. OCO brackets is one cancels the other bracket. So if you get 2 orders in here, one take profit, one stop loss, when one gets taken out, it cancels all the other orders. I think on this one, I don't know if it'll put it in on a day like today. No, it's not going to. But it'll put in the order, and then you can manipulate it, but it doesn't let you set the brackets ahead of time. One way you can get involved without any money out of pocket is Ninja Trader. They just started this contest deal. Let's see if I can get in here. You want to go to arena.ninjatrader.com and click on Get Started, and it'll let you open an account. You can sign in with your Google account or Apple account. No money involved here. And they're offering contests for people just to get folks familiar with future trading. You can go in here and join this contest, and it your likelihood of winning, it's just a 1 day contest. You might get lucky and win. Grand prize $8,000. They're giving away. It shows on here. I'll show you when I log in. You can really get a lot of money out of this thing if you know what you're doing. So this tournament, you start out with a balance of 25,000, but you can only trade these products, and you can only trade micros, max position 3, and then gold and FX. This is a euro, and then crude oil. You can only trade 2. So won't be anybody putting up gigantic numbers on a day like today. But this one, 400,000 in prizes, 1,500 winners. So you could actually make money learning how to trade futures. That's a pretty cool deal. So on this one, let's see if I can find the platform. I'm actually signed in. I forgot about this one. I came in at the very end of the day and all that chop and tried to trade one, but it just didn't work out. So I killed it. I didn't get to compete on that one because I didn't even join until after lunch. But the winners put up $1,200. Oh, that's, yeah, 1,400. They were doing some scalping, I assume. But this one only paid first, second, and third $100 each. The others, let's see. This one's going to pay 8,000 for first, 2,000 for second, 1,000 for third, and all the way to 400th place is going to get a $100 bill. So, I mean, that's just a free way to learn, and you could actually make some money in the process. I think it's a really cool little situation. Let's go to their charts. Uh-oh, platforms. I need to go back. Starts in 5 days, Euro Blitz. It'll show you the things you can join. I'm already in here. I haven't done that, but I'm going to join it. 25,000. First through 5th place gets $100. I don't know if I want to mess with that one. Okay. So, Ninja Trader. Let's get into here. Let's say you wanted to do this. You're going to start learning to trade. It's absolutely free. You log in. I have an account with Ninja Trader. I don't have any money in the account, but I had an account from years ago, and I did their other version called Tradeovate that I do have. That's my personal brokerage. Do not put real money in a live trading account until you've worked with a prop firm, gotten funded, you're consistently profitable for 5 or 6 months. Then you can consider doing a live brokerage account. Until then, if you put money in here, there is a 99% chance you're going to lose it. You can make money one day, do great, and then lose it. So until you learn how to control your risk and your emotions and really start doing well, don't get involved with live trading. On this one, you can get into the simulation. I have a couple of contests coming up, so it'll show those accounts here, the ones that say CHTNA, those are the arena accounts. But you also get this demo. Even if you're not in a trading, you can do this every day. So you can be in this chart here. This one is MNQ. That's crude oil. I don't even know. See all these lines? These are called indicators. They default put them on there because a lot of people like to use them. In my opinion, they are a distraction. I don't use them. This is the way my chart looks. It's clean. So I can show you on here. See this? They call it an ATM. That's automatic trade management. And you can go in here, you can turn it off, which I don't recommend. I've got 100, 200. So I click on that settings, and this is this is what it is. $100 stop loss. And here you can set your type of stop, use a market stop. If you use a limit stop and price goes through you there and it doesn't fill you, you can lose lots and lots of money because there has to be a buyer at that level in order for you to get out, or a seller if you're selling short. That's another thing I need to talk about. Okay, so you want your stop set to stop market if it depending on the platform. You got stop limit, and you can trail. Auto break even will make it where you don't lose any money. That you can set parameters for that, but I just use a stop market, and that $100 on the Nasdaq is 50 points movement, which is more than I normally use. Normally, I'm in a 25-point stop loss, which is $50 on one micro. But the market has been so volatile, I spread it out and put on a $100 stop loss. So that's your automatic trade management, and I recommend having that every time. This is another advantage to having trading futures versus stocks. You can make money on futures contracts, whether it's going up or going down, just by clicking. You could buy market, you're going to make money going up. Sell market, you're going to make money going down. And that position bracket will show, okay, if it gets up here, I'm going to lose $100. If it gets down here, I'm going to win $200. And you can just see those. They'll light up on the chart. It will show them. I don't know if, let's see. Yeah. So as I hover over, I don't think it'll actually let me place the order. You can see if price gets to that red line right there, if price gets to that red line, it'll fill the order, and then my stop loss is going to be up here above the highs, and then let me see if it'll put the order in place. No. Order rejected. Yeah. So we'll just have to look at it from that point. You can see the green line up above would be my stop loss, and the green line down below is my take profit. So I would need price to get all the way down there. Now with Ninja Trader, it applies the same parameters. So if it gets all the way up there to 525, 589, the upper green line, I won't just lose $100, I'll lose $300. So you'd have to move that. If you only wanted to lose $100 on 3, then you'd have to move it down. And another thing I don't like about this platform is it doesn't tell you how much you're going to lose when you move your stop loss. You just have to calculate it. It's $2 a point for every micro whenever you're trading Nasdaq. It's $2 a point. So on 3, it would be $6 a point, and you just have to do the math. Where on TradingView and Topstep, it shows the dollar amount you're going to lose. Which I don't know if that's a good thing or a bad thing. I mean, it is. It gets in your head sometimes. Oh, I'm going to lose $500 on this trade if I'm wrong, or whatever it is. You don't. It sometimes can get in your head, but you also don't want to put on $2,000 worth of risk and blow up your account. So it can be a double-edged sword. But I think it's beneficial to have that dollar amount. But you can also calculate it in your head as well. If you're doing one, it's just $2 a point. You scale it from there. But on TradingView and on Topstep, when you place an order, like if I did that same order to sell short, it won't even let me do it. Limit sell 1, it's just going to reject. But if I did that same order to sell short and I had that $200, if I did 3, it would move it to the correct point value where I would only lose $200. If I did 10, it would move it closer where I would only lose $200 instead of putting on $100 loss per contract like they do on Ninja Trader. But with Ninja Trader, absolutely free. You can learn with no risk. Now, something you should know, if I did the buy on this, let's see. Yeah. If I did the buy, my stop order is now red. If it comes down here to the bottom at 489, I would lose. And if it goes up there to the 639, I would win. So you can sell short or you can buy and go long. They call it short and long. If you're selling, you're going short. If you're buying, you're going long. So that's a really important part of futures trading that I like, is I can make money both directions. Also, once you just pick one product and you learn it, you learn the way the price moves. This is really, really not a good example of how price moves in a day. But see how this gap here, I refer to regular trading hours only, and this is what happened between 8:30 Texas time and 3:15 Texas time. That's where most of the volume occurs. And so this would be the day before. Here's where we opened, there's where we closed. And so there wasn't much of a gap there. But there are reversal patterns. They're just patterns that you'll begin to see over time watching the charts that are repeatable, and you can make money with them. This is a little one, but it's still one. So here we have a push high. This red candle would be considered a bearish breaker. This is the very last one before the run on liquidity. So right there, that's our bearish breaker. This candle body starts closing below it. That one touches it to the tick. You can just sell short there and aim for this low right here, and you can make money right there. If you got in right at the breaker, which looks about like 25,150, and took profit at that low, that would be 50 points. So $100 on one micro. Or you get $300 on 3 micros. So those little moves like that, that's your bread and butter. Just aim for low-hanging fruit. You don't want to have to go all the way to the end of the lowest of low of the day. Just low-hanging fruit. That'd be that wick right there. You make your money. And then the opposite is true once we go the other direction. You'll notice it uses this as a pivot point. That line there, we touch it here, but then once we start going above it, we have a fair value gap here. We don't quite make it down to it, but then we start going above, we come back down and touch it again and go up again. Any of those would be a good place to enter. And we ended up making this one a pivot point for a good while, a good part of the day. Came back down, got into this fair value gap, and here we go again. So there is potential in those levels, and you'll see these types of patterns repeat over and over and over the more you watch the charts. If you're bouncing around from S&P 500 to Nasdaq to crude to gold, and bouncing around, you won't develop a sense of how that product moves. So stick to one, learn it, and then you will begin to start recognizing these patterns. Crypto, if you want to do crypto, I haven't done it at all. I can't really say what it's going to do if these patterns are repeatable. I just know a lot of people that I've talked to that have tried to apply this type of system to crypto. They say it's not consistent. And so I would not. It's just like creating an individual stock. Anything can happen at any second. So I prefer these stock conglomerates. So what else am I missing on here that would be beneficial for a new person? The average trader, the average Joe, they think, oh, I'm going to get into trading. Maybe they buy some stocks and they do very well. I mean, that was me. I just started buying a bunch of penny stocks with that stimulus package money we got back in 2020. I started buying a bunch of those. Had a day where all of them hit. made $20,000 in a day. And I think, oh my gosh, I am a freaking professional trader. But over the course of the next several months, all of that money went away. But I knew it was possible to make that money. So I put more money in. I lost all of that. That's the average trader's journey. The, on average, trader says, I'm going to get involved in the market. Maybe they have a big win in the beginning, maybe they don't. But on average, in the first 6 months, they will lose $10,000 of their own money. That is no longer necessary. You can think of it as paying a college tuition, but it is no longer necessary. With these prop firms and these free trading accounts like this, you can do the learning with zero risk. Now, me, and I suppose everybody is going to be like this to a degree. Oh no, I can get in here. I can learn it quicker than that. Some people say it takes 4 years. Well, if you don't have an edge and you're trying to figure all this out and you're running all these indicators on here and listening to the YouTube guys, and they're saying, oh, yeah, the average directional index is when it hits a high, or RSI, when it hits a high, it's overbought, oversold. That's when you need to be selling. And you can go through and listen to all that garbage, work through, try to develop your own edge. And yeah, you're going to lose a bunch of money trying to learn. So I can fast track you on the system because I know that the system I use works. You can look at that playlist. You see a repeatable pattern every single day for the daily reversal patterns. It's like a broken record. Now, since the government shutdown, it has not been as clean. We've had a few clean days, but the majority of the time, it's a repeatable pattern. That's your edge. That's what you can use to make money. You may not make $1 million in a day, but you'll make money. And you can eventually get where you consistently make money and do this for a living. If you go the other route, you say, you know what? I tried that one day and it didn't work, so I'm going to go with this. Joe Schmo over there on YouTube said, if I just sell at the moving average, then I'll make money. Well, go ahead and do that. But I promise you, you're going to come back frustrated. I've been through every single imaginable indicator, everything. And until the concepts I use is a gentleman called Michael Huddleston, Inner Circle Trader. He has a YouTube channel, and I use his concepts. I condense them down to the basics because he's got like 80 different PD arrays. My mind is too simple for that. So I just picked one, and one component that's common throughout all of them is fair value gaps, and we run highs and we run lows. So we're fading the extremes, watching for a reversal pattern like this where there's a fair value gap present, and trying to get a good entry. A fair value gap is any time when this wick and that wick, there's no trading in between. This is a fair value gap here. This is one right here. It would be easier for me to show you over here on this one, that same setup. Let's see. That's a 15 minutes. Let's go to a 1. Yeah. So this would be the same, that same 50 to 100. So that would be our breaker right there at the bottom of that wick. Just make this big. Okay, so right here we have, this is a fair value gap to the downside right here. We have these candles wicking into it, and that would be the basics of ICT strategies. We want to see a high or a low get taken. We want to fade an extreme, and then we want to see this fair value gap. There's no green candles where this red candle just went through. We got wicks, but no candle bodies pushing into that. So selling short there, aiming for the low-hanging fruit here. That's money. That's a repeatable pattern. We can work with that. And that's all it is. That's all trading is. You can put all those lines on here, but I promise you, you will get frustrated. This has like 80% accuracy. That stuff, you might be able to get 50%. You can get 50% from a coin flip, just coming in here every day and saying, okay, I'm going long today. 50% of the time, you're going to be right. So, and you can actually make money with a coin flip. You can actually do it. One thing to consider, the market does not provide 20, 30, 40 setups a day. So taking 20, 30, 40 trades a day is going to be a losing strategy. Don't do it. Train yourself early to take one or two trades. My strategy basically consists of, we got the regular trading hours right here. So we work off of a higher time frame. Each 4 hours is one day. So right here we have these two highs. You see those two highs? One of them's a little bit lower than the other. So those two highs are premium targets for price to move to. Another thing that a lot of new traders think, they think that news moves the market. News is used to move the market. It definitely is. But the market is not moving because of the news. It's moving because the market makers want it to move. And they use the news as an excuse to move it where they want to. You'll see good news make the market go higher, and you can see good news make the market fall out of bed. It doesn't matter. The market does not run on logic. It runs on a computer. So it would offer up here. This would be called fading the extremes. And then we would look for one of those reversal patterns. And you can usually get a reversal pattern. It's called a reversion to the mean. So it would go back to the middle of this candle. That's one of my main strategies. I use the regular trading hour 4 hour as my major levels, but you can do it with smaller time frames, 1 hour candles. You can do it with, you got relative equal lows there too on the 1 hour. So both of those are going to be targets on Monday when we start trading. I'm going to be looking for price to go to one of these and possibly reverse, preferably the top one, and reverse, come fill this gap. Anytime you see a gap in the trading, no business has been conducted here. The chances of returning to it are very high. So from a 4 hour perspective on this one, this is one day. It was a directional day. If you got long early, you're good. If you're a reversal pattern trader like me, not so good. I did make a little money that day, but that's now directional days are difficult for reversal traders. We got into all this business. This was very difficult to trade. You can see we're not taking the highs and lows. We come down and leave them. That's abnormal movement. Here we took a high right there, but it's a separate day. This is one day, that's one day. So this day right here, we actually had a reversal pattern. This is the morning session, this is the afternoon session. So we had one on this day, and we had one on this day as well. But these days are pretty much directional. This is morning, chopping around, and then we go down. We took out that low finally 24 hours later. But that's my basic trading strategy. Fade the extremes. This is a range. Anytime it goes to the high of the extreme, sell short. Maybe we get back to the middle of the range. You see how when I click on those, it puts those blue dots? So if this was a line chart, you would see the line going right through those blue dots. You wouldn't see all the highs and lows. That's where the line would go. So these candlesticks are really important for that. I feel like I'm rambling a little bit. You can also see on this, we have this fair value gap, recognizable pattern. We filled that fair value gap with this candle wick right there. And then pulled back. Inefficiency, sell side inefficiency. We offered sell side through here, but buy side has not been offered. Once we offered it through there, what happened? Price pulled back. So that's something to look for as well. We look at that on a 1 minute chart. I bet you we can see. Let me go back to that 4 hour so I can mark it. This one right here. I'm just going to put a little box around it. And then when we go to our 1 minute time frame, we should be able to see that on the chart pretty easily. And I'll just show you real quickly that recognizable pattern. So just like that one before, we look for, when we're moving up, we look for the very last down close candle in that PD array. Price delivery array is what a PD array is. Okay, so we look, this is the highest point right there. Very highest point is also a red one, which is good. But our last down close candle before the run up is this one right here. Once it pushes through there, we look for a fair value gap. We got one right here. And then we try to enter as close to the bottom of this fair value gap, which is this wick right here, as we possibly can. In this situation, this was as high up as it went. So you could mark it in here, or you could wait and get in down here. Getting in down here would have been fine too. You don't know that at the time, but you want to try to enter as close to the bottom of a fair value gap or center of a fair value gap as you can. So there's another one there. We did push through that one a little bit, but we eventually fell out of bed. That's a recognizable pattern. Another one you can do instead of this one is use, since these are kind of in a little consolidation here, use this one as your breaker. That shows a shift in market structure. This was a clue, but this shows a shift in market structure. And this fair value gap is where we pass through the breaker right there. So this entire fair value gap, the entire candle, is a point of interest. We don't want to see any candle bodies closing above. That's the fair value gap. We don't want to see any candle bodies closing above the high, the open of this candle. So we open there, we closed here. So you can put a line there. And you can see all the candle bodies respected the open of that candle. So we did push down, but we came back up. Respect, respect, respect. Sell short. Once it starts pulling back down in below this fair value gap, we pushed up again, sell short right there. And you can just aim for this low, what we just created, or this low, or that one. Maybe you put on several contracts and you just take some profit along the way and let it run. This one ended up filling the gap and running a long way down. I think it went down the majority of the day. No, it came all the way down. It took out this low. You can see that. And then we put up another reversal pattern. I think this is the day it triple tapped the lows. But another reversal pattern here is our green one. The last up close on the run down is our reversal pattern there. So you can see once we made that one, that's the last up close candle on the run down. That red line is right on it. I actually try to make those a different color so we can see them later. This visual is important. But you can see we respected that thing. This is also a fair value gap here. You can mark it out. It runs all right there with the breaker at the bottom end of it. You see how those candle bodies, we wicked into the center, but we never got below it the rest of the day. So you could buy here, you could buy when it falls back down. You could have bought here. We didn't run liquidity, so you could continue to hold, add when it comes back down, add more, and just aim for these highs or this high. Eventually it got there here. Really repeatable patterns. You just see them over and over and over again, and making a living doing this is absolutely 100% possible. So learn it. Two guys that I would want to mention in this video that I met recently, that Cody Dunnigan, I talked to you a couple of days ago. You can definitely do this. It is going to require time in front of the chart. And then the other one that I would like to mention is Sean, Hulk Hogan's Ghost. He was one of my Uber customers last night. Uh, you, you can definitely do it, Sean. Um, I know you have a full time, and so it's going to require some time in front of the chart. There are other sessions you can trade Asia. It starts at 5 p.m. in the evening, or actually, Asia opens at 7 p.m. Texas time. So you can learn to trade that market using these same strategies. Um, I don't really have a whole lot of more as far as trading basics goes. I'm sure I'm going to think of something I forgot. But if any of you have any questions, just y'all both have me on Facebook and or have my phone number, so just call me and I'll be happy to answer any of your questions. All right. I guess that's it. Talk to y'all next time.